So, what did we have going on today? The market and Tesla were up briefly this morning until the S&P and the Nasdaq collapsed while the Dow continued to soar. One could estimate that this was a Friday and also the end of the month, so completely just write the day off. But others are pointing to the possible movement of money out of tech and into value. At the end of the day, I hate that phrase, the S&P returned to green and the Nasdaq and Tesla came this close to getting back into the green. So interesting day, if stupid. Anyway, we'll see what happens on Monday when we get into the month of June. There are some people calling for a June swoon. Who could that include? Oh yeah, that would be me. Elon has been sued again, with a shareholder claiming he benefited from insider's knowledge when he sold his shares to pay for the Twitter acquisition. Ay, 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 ay. He was forced to make the Twitter acquisition. He sold the shares at, numbers that were not great compared to what he could have sold them at. The sale of the shares took place at a time when he had to give notice. Anyway, this sounds like a non-starter in terms of any kind of a lawsuit that might be successful, except I kind of guess it depends on who the judge is, right? Catalysts galore coming in June. Any day now, we could see FSD 12.4 roll out. Could happen tomorrow, could happen Sunday, Monday, rolling out to the rest of us. There could also be a 12.4.1 during June. There's even a potential for a 12.5 in late June. Each one of these new versions that comes out creates all kinds of new videos, all kinds of new opportunities. But you know what? They're getting more and more boring. The videos are getting really boring because there's nothing to see. The cool part about the new ones are, or the new ones will be, a few that we have seen and the ones we're likely to see, is that people will be sitting there with their hands in their lap because they will no longer be nagged. So that will be kind of fun and could create videos that would be far more successful in terms of getting the public involved and interested. Even though, again, they're boring because there's not much to see. Another catalyst this month could be Starship this Wednesday. Supposed to take off this Wednesday. Maybe it does, maybe it doesn't. Maybe it goes through all of the hoops that it's supposed to. We're hoping that it will do everything, come back into the atmosphere, do a faux landing in the ocean. If it hits all of its marks all along the way, we might be looking at a Starship launch coming up in another 4 or 5 weeks. That could actually take some kind of, maybe it'll start taking actual stuff to space. I'm not sure if that will be the next one or if it's going to take one more launch before we get to that level, but potentially I can see we might see that. The other thing, I guess we would have to have one more launch. They need to land it for real, back down and grab it with mega crunchers, I forget, mega everything, right? But anyway, the big chopsticks. Well, another catalyst would be the big vote and shareholders meeting coming up on the 13th. By the way, invitations are starting to go out. So if you think you might be on that invitation list, watch out. You might be getting something in your email or your text. Also, another catalyst would be weekly China numbers. They've been moving the stock recently. The last couple of weeks, we've noticed some movement just with those Monday afternoon, Monday night China numbers that are talked about the next morning on Tuesday. And as we move towards the end of the quarter, there'll be lots and lots of speculation from all those regular guys talking about where we're going to end up at the end of the month, end of the quarter. And of course, that information comes out on July 2nd, roughly. The final information comes out on July 2nd. But during the course of the month, as we get closer and closer, there's lots of opportunities for catalytic days there as well. Right now, we're hearing pretty good news out of China and the US, with production numbers up on the Cybertruck and the Model 3 refresh in the US. All right, it's been quite a while since I've provided any real numbers. I used to spend a lot of time putting together my analysis of where I thought we would be in 3 months or 6 months or a year or next year, or the following year, the following year, the following year. Anyway, but I thought today I would just take a look at one. And this is one that I have like 99.9% confidence in, but I'd like to know if you don't. So I'm thinking that next year, let's say by the end of the year, we will have full production in Lathrop and probably full production in Shanghai at the mega factories. And then there's Powerwall that will be added to that as part of the energy storage division, and then all the services around that. So if that's anywhere close, and again, I'm going to be very conservative here, that would be sales of around 30 billion. Yeah, 30 billion. In other words, 30% of current total Tesla sales. Once all of that is done and all of those things are being shipped and the bookkeeping catches up and all of that, we should be at around 30 billion in sales. And I think by the end of 2025, early 2026, that's what we'll be hitting. Now, there's been a lot of different margin numbers suggested. So it could be, it's going to be over 30%. It could be that it's 25, which Elon says that's what they're shooting for. But what I do think it's reasonable to suggest it's going to be right around 20% all in. So taking into account the overhead that you would apply to that division, which Tesla's not going to do for us, so we'll never see it. But if you were able to just take the overhead that was related to that division and also take all the costs associated and all the setup costs and the tooling, take all that out, I think you'll still come out with about a 20% all-in number before you get to taxes. All right, so that would be about $6 billion in profit, or almost $2 a share. And again, all these are really low estimates. It could be more like 40 billion instead of 30 billion, quite frankly. As the growth of that division would be really strong and on the order of 50% per year, we can put maybe a 50 or 60 PE on that. That would give us $100 to $120 per share value of Tesla for the forward PE at the end of next year. Right now, or close to right now, with no contribution from auto or anything else. Now, make sure I did the math correctly. I want you to let me know. Maybe I'm messing up. Maybe I messed up. I'm not sure, but I don't think I did. So if that division does increase by 50% in 2026, you would now be looking at $3 per share or $180 in value all by itself. The following year, that would be $270 and then $400. So in the past, I thought growth would be even faster than that. And it might be if Elon is going to make his master plan numbers, if those are still in play. But even at 50% a year, things get crazy pretty fast. Anyway, that's just a off the napkin type analysis. But let me know in the comments below, is this completely wrong? I think I'm okay. Now, speaking of the vote coming up on the 13th being a catalyst, we have this from Herbert Ong. He says, Morgan Stanley's Adam Jones dropped a new Tesla note, and they conducted a survey about Tesla's upcoming shareholder vote. Now, I don't know what good the survey results might be, but they were able to survey 109 respondents. They found out that 57% of those expect approval. These are not people that said they are going to vote to approve. They expect approval. This is outnumbering the portion of respondents who expect non-approval by 2 to 1. So that must mean that only about 28% thought no, it wouldn't be approved, and the rest didn't have an opinion. Responses also indicate an expectation of greater potential downside volatility for Tesla shares if it is not approved. The article, the note goes on to say, we've encouraged investors to pay close attention to the June 13th shareholder vote due to the significance of the long-term strategic decision of the company. We believe that CEO Elon Musk needs Tesla now more than ever. And AI is a capital game. The broader collection of Elon Musk businesses may collectively invest many tens of billions of dollars in AI infrastructure in coming years, and the cost of capital is deterministic for AI supremacy. So he says that CEO Elon Musk needs Tesla now more than ever. I'm saying Tesla right now still needs Elon Musk as much or more than ever. While impossible to predict the outcome, we expect that the event could potentially drive material volatility in Tesla shares. We distribute an investor survey via email on the afternoon of May 29th to our distribution list to gauge expectation for the result of the vote as well as Tesla stock price reaction. Ultimately, survey respondents believe that the potential approval of Elon's comp package will drive the stock price up. And conversely, if it's voted down, then it'll go down. Survey respondents who expect a significant negative move, 6 to 10% upon non-approval, outnumber those who expect a significant positive move upon approval by more than 2 to 1. So we've heard that story before. People are saying that if it is approved, the stock will go nowhere. And if it's not approved, the stock will go down. Yeah, okay, maybe. All right, this is Randy Kirk, by the way. Have you hit the like button? Come on now, remember to do that. It just takes a second. And then subscribing is great. You know, I lost 12 subscribers yesterday over that Trump kerfluffle, and I don't care. The people that told me that they were unsubscribing because my one opinion caused them to think that they could no longer trust my opinion. I'm sorry, that opinion makes absolutely no sense. Okay, so anyway, I could use 12 more subscribers to take care of those people that quit. So subscribing today would be a really good thing to do. And then hitting the notify button would be good too, because guess who's on tomorrow morning? Yeah, right now you only get Larry Goldberg once a week. He'll be back in the country soon, and we'll have him on twice a week and sometimes more than that. But right now, Larry's on tomorrow morning. Not sure what we'll talk about yet, but I just took a quick look at the All In podcast this week, and there wasn't anything about Tesla at all in there, so I'm not sure that that's what we'll talk about. But anyway, we'll find some definitely cool stuff to bring up to you tomorrow morning. And then, of course, hitting the Patreon would be fantastic. We have NorCal returning after a brief absence. He popped back in at the $5 level. He said, and then he said, I saw your video on the trial, and I noticed some backlash in the comments. I'm returning as a Patreon member to support you. Why, thank you, NorCal. That is phenomenal. And then Bob C. also joined at the $10 level. So when are you going to come and join? Come on now, jump in there for whatever reasons you might have. My favorite reason is, Randy, I'm getting value from the show, and therefore I feel like I should give you a little tip. All right, I was a waiter, for a couple of 3 years, loved waiting tables. I was very well tipped. From the ISM homepage, the Chicago Business Barometer came out this afternoon. Now, it didn't seem to really impact the market that much, but this is the last Fed district report, and the Fed pointed out that other districts were doing okay or did better than Chicago. However, this report from Chicago was dismal. Dismal indeed. And once again, raises questions about how the second quarter GDP possibly could be headed to negative territory rather than the 3.0% increase in GDP that the Fed is predicting. But then the Fed is notoriously horrible at near-term GDP predictions. So what happened to the Chicago group? Descended 3.5% to 37.9 in April. This is the 5th consecutive monthly fall, pushing the index to its lowest level since November of 2022. 4 out of 5 subcategories fell, with the move driven lower significantly by falls in new orders. That's a pretty important category. Production, that. Employment, and to a lesser extent, supplier deliveries. Whilst back orders, who uses whilst anymore? Whilst order backloads. Whilst order backlogs offset some of the differentiation. So they have some good backlogs. Interesting. Employment was the lowest since February 2023. New orders dropped to November 2022 levels. A special question was asked in April. Looking ahead, which of the following potential disruptions are you most concerned about? This blew my mind. The top 2 responses were 36% are worried about geopolitical conflicts. Okay. And tied for second were 20% were concerned about cyber attacks and supply shortages. Interesting. Those were the 3 things that had the most concern. All right. Well, Barron's, believe it or not, Barron's has been listening to my channel. Yeah, they've been checking in. And where, on this channel, I've been talking about a pullback coming in the stock market because it's just out beyond its skis. And at a certain point, it's going to fall back the other direction. It just happens. It's going to happen. It has to happen. And the question is when, but I think it's now. Anyway, heading into this past week, they say signs of optimism were everywhere. Bulls outnumber bears in a recent American Association of Individual Investors poll by more than 20 percentage points. While Wall Street strategists at firms like UBS, BMO, and Morgan Stanley were busy raising their price targets. And why shouldn't they? The S&P 500 index had gained 26% since bottoming in late October. That's pretty dang good. But markets can get too optimistic. Randy can't. And that just might be the case now, according to Renaissance Macro Research's Jeff DeGraff. He noted that a recent investors intelligence survey had put the number of bulls at 60%, even though the S&P 500 had risen 5% over the previous 13 weeks, a gain more consistent with a reading below 50%. So, when the market goes up a lot, then you get people starting to be less conservative, more cautious. He says, wouldn't you know it, returns tend to be below average, not negative, but below average, when bulls are excessive to historic returns. When bulls are excessive to historical returns, then the future of the market is below average, though not negative necessarily. A particular concern are fund managers who have just 4% left, 4% of their portfolios in cash. So not much tinder or something like that. According to the Bank of America survey, that's the lowest level in 3 months, and anything below 4% is a sell signal. Anecdotally, fund managers are already starting to get more careful. Ken Mahoney of Mahoney Asset Management, for one, says he's holding on to much of his remaining cash because we just had some great runs in stocks, and that he's waiting for lower stock prices before buying more. That type of hesitation could leave stocks with a dearth of buyers and put them in a vulnerable spot. Weakness is already creeping in. The S&P 500 was on pace to drop 1.2% this past week, while the Dow Jones Industrial was declining 2.3%. Well, it made up a bunch of that today. And the NASDAQ falling 1.1%. And yeah, it was down yesterday and almost down today, but managed to scrape back up. Most dips this year have been of the mild variety. I think we went down about 4 or 5% on that last dip, ending with higher lows and leading to higher highs. Still, early signs that the market will crack are cropping up. For one, the market isn't reacting positively to good or bad news. On Tuesday, the S&P 500 finished little changed even after consumer confidence rose more than expected, and it declined only 0.6% on Thursday, even after the Bureau of Economic Analysts revised first quarter U.S. gross domestic product down to 1.3 from 1.6. That's a sign that the market is looking increasingly fragile. And of course, today we had the PCE numbers and we got basically a huge increase in the Dow, but meh from the NASDAQ and the S&P. Anyway, what actually happened? What are the details of what happened today in the markets? Let's take a quick look here. We have got Tesla down 71 cents. It had been down a lot more and it had been up quite a bit. As noted, it ended up down 71 cents. The Dow Jones was up 574 with the NASDAQ down 2. Now that is a big, I wonder if that's clear, somewhere near a record for that kind of divergence. And S&P up 42. And then the Magnificent Seven were split pretty evenly. Let me just go down them for you. Apple up 96 cents, Google up 40 cents, Amazon down 289, Meta up 22 cents. Down 22 cents. Microsoft up 46 cents, Nvidia down $8, but it had been down a lot at one point. I want to say on the order of $15, $16 at one point. Okay, then we've got the Cathie Wood stocks completely mixed, but narrowly in every single case, 8 cents, 10 cents, 20 cents. All right, let's go ahead. Let's look at the percentages for those of you who like me to do that. We have got the Dow was up 1.51%. NASDAQ basically unchanged. S&P up 0.8%. About half of what the Dow was up in terms of percentages. And Tesla down 0.4%. Okay, and then we have the, what's gone wrong with my stuff here? My CNBC, here we go. All right, so we got the bonds. Bonds ended up for the day down 5.2%. They have been down more than that earlier, ended up above the 4.5 area at 4.502. We have got the 2-year also down about identical, actually, ending at 4.877. So that one I can figure out in my head easily. That is 3.75, which is narrowing now back down to that 3.5 that it was for quite a while. And then the 2-month is unchanged for the day at 5.39, which is almost 90 basis points, just under 90 basis points higher, which is at least down from the 100, although it barely, I'm not sure it even touched on 100, but it was really close to 100 there for a bit. So that is now narrowing for the last few days. All right, let's go ahead and look at oil. Oil down 73 cents or 0.94%. And Brent down less, only down 23 cents. So therefore making that spread larger again, $4.40 something cents, getting closer to $5 again. And yet there's not a lot of stuff going on in the Red Sea right now. Or the Middle East. Nat gas ended up turning around today, up 0.35% at 2,581. We have got gold down $18, $2,347. Copper, silver, if you're interested, down 3%. That's a pretty big drop. And then, actually falling. Okay, no, still over $30. And then copper still sitting right about where it was, down 67.67% today. We have got the dollar sliding a bit, not really that much of a change. We have got Bitcoin down 1,308 at 67,471, so still in that same trading range. And then, of course, that's all things that happened. Now, Bitcoin, of course, is 24 hours. The rest of those were what happened earlier today. And, of course, there's no pre-market on Friday, so there's nothing to talk about there. All right, so the question becomes, which show from today or yesterday or the day before, which show should I promote now and tell you that the card is above? And I'm going to not shock you, and I'm going to tell you the most important show of the last week, the one, if you haven't watched it yet, you need to go back and watch, is the Brian Wong 2-part series. Part of it was on Tuesday, part on Thursday, about the AI revolution, about what that means in hardware, what it's going to require in terms of NVIDIA, what it's going to require in terms of electrical power production, and how Tesla fits into that. 2 parts, Tuesday, Thursday. I'm going to put that up for you. It was Tuesday, Thursday? Might have been. Yeah, I think so. Anyway, whichever days, it doesn't matter. I'm putting both cards up again, just in case you still have been resisting my insistence, my sales job. I mean, it's all about closing. I'm trying to close you on this one. Go back and check those out. They are going to be relevant a month from now. They're going to be relevant a year from now. There's got to be some way that I can keep those two rolling because they are fantastic. All right. Remember, tomorrow morning, we got Larry Goldberg. Look forward to seeing you then. And then until then, it's been great talking to you.